Good morning, everyone, to this morning's Sunday finance and budgeting chat. Of course, today we're going to focus on all the updates that have happened this week in regards to the student loan debt forgiveness. And as always, if there's another topic that you guys want to discuss, just let me know in the chat. Happy 4th of July. My birthday is coming up, and I have some personal and home updates for you guys. Hi, Michael. How are you? Good to see you. Um, let's get into student loan debt forgiveness. I am going to be going to the studentaid.gov website. I don't think I want to help them improve their site right now. Okay. So this is the studentaid.gov website, and right here at the top, in the yellow bar, it says the Supreme Court issued a decision blocking us from moving forward with our one-time student debt relief plan. Visit studentaid.gov/debt relief to learn more about the actions President Biden announced following the decision and find out how this decision impacts you. And then underneath that, it says student loan borrowers can get lower payments from the new SAVE plan. If you sign up for Repay plan now, you will automatically be enrolled in the SAVE plan before payments resume. Okay, so let's go to studentaid.gov/debt relief. Let me make sure I'm still sharing the right thing. I am. Okay. JR says, how come the United States government always drops the ball in regards to being able to draft, enact, and put new legislation into motion? It's just really hard, right? You guys were like, Shelly, you might be good at politics, but it's so hard to try and look at things and then distribute it fairly. And we vote our elected politicians into place. And sometimes those people are Republicans, and sometimes those people are Democrats. And I don't think inherently it's just one side doesn't like the other. It's just that there's always going to be more than one way to get things done. And it's actually that way to try and help keep things fair and keep checks and balances in place, but it's tricky. Hi, Sean. Thank you. Happy 4th of July to you as well. All right. Back to the one-time federal student loan debt relief. Okay. So we're still on the studentaid.gov website. We're just in a different section of it now. So these are the frequently asked questions about debt relief. Oh no, hold on. Let me read this yellow part first. The Supreme Court issued a decision blocking us from moving forward with our one-time student debt relief plan. Learn more about the actions President Biden announced following that decision and find out how this decision impacts you. Okay, so what does the Supreme Court's decision mean for student loan debt relief? Under the court's ruling, the U.S. Department of Education has been prohibited from implementing the Biden Harris administration's one time debt relief program. I applied for and was approved to receive student loan debt relief. Will I still receive relief? No. The Supreme Court has ruled that we are unable to implement one time debt relief under this initiative. As a result, we won't be able to discharge any loans under this program. Is the department considering alternative ways to provide debt relief to borrowers? Yes. The secretary has begun a new rulemaking process to consider other ways to provide debt relief to as many working and middle class borrowers as possible. What is the timeline for the new debt relief program? The department will work to complete and implement the new rules as quickly as possible. So basically, no timeline. We don't know. I qualified for the one time emergency debt relief plan. Will I also qualify for the new debt relief? The department will design the parameters of the program, with public participation over the coming months. So that also means not anytime soon. However, the Secretary has directed his staff to explore policy options for debt relief that will help as many people as possible. Why does the process take so long? By law, regulations related to federal financial aid must go through a negotiated rulemaking process that involves extensive public input. They start with public hearings and convenings of non-federal experts to discuss ideas. The rulemaking process takes time, but we're going to work as fast as possible to get this done. Should I pay my student loans while I wait for the administration's new debt relief program? Yes. Interest will start accruing on September 1st of 2023, and first payments are due in October. When designing a new debt relief program, the Department of Education will consider ways to ensure that borrowers making payments do not reduce their eligibility for debt relief. And now we're on to the frequently asked questions about payments resuming. I'm going to pop back over into chat. So far, still no questions there. Okay. Also, my hair is weird today. Okay. That's not why you guys are here. All right. Back to the debt relief. Okay. So these are the questions regarding the payments resuming. I'm going to take a minute and take a sip of coffee. If you guys would like the video, I would really appreciate it. All right. What if I can't make payments right away when payments resume in October? Borrowers who want to reduce their monthly payments should be sure to use studentaid.gov to explore repayment plan options, including income-driven repayment plans, which could significantly reduce monthly payments for qualifying borrowers. The U.S. Department of Education has finalized the most affordable repayment plan in history. It's called the Saving on a Valuable Education SAVE plan. Borrowers signed up for the current revised Pay As You Earn plan, repay plan, will be automatically enrolled in SAVE. Learn more about SAVE. We might click that in a second. For borrowers who still can't make their payments, the U.S. Department of Education is creating a temporary on-ramp period over the next year that will help borrowers avoid the harshest consequences of missed, partial, or late payments. During that time, missed, partial, or late payments will not lead to negative credit reporting, default, or loans being sent to collection agencies. Borrowers who can make payments should do so, as payments will be due and interest will accrue during this on ramp period. Additionally, missed payments will not count towards loan forgiveness under any of the income driven repayment plans or public service loan forgiveness. So, what they're saying is there's going to be an on-ramp period that they say that's over the next year. So it's going to help borrowers avoid the harshest consequences of missed, partial, or late payments. So that won't lead to negative credit reporting, default, or loans being sent to collection agencies. But guys, like one of the things that I hate most about debt is interest. Like, so the interest, right? If I borrow $1,000, but there's interest on that loan, it makes it so that I owe more than $1,000 by the time the loan is done. And so that's still accruing. That's making your payment that is due, it's going to make it even higher, right? So that's why they're saying continue to make payments. And that would be my advice as well if you can to try and do that. I think one of the problems is that it's been so long now since people have paid. Like, I don't think people are really thinking about this as part of their budget. Okay. How should I prepare for student loan payments to restart? Make sure you know which loan servicer is yours. Update your contact information in your profile on your loan servicer's website and in your studentaid.gov account. Consider applying for an income driven repayment IDR plan. An IDR plan can make your payments more affordable depending on your income and family size. This summer, we will begin implementing the SAVE plan, which is our most affordable repayment plan ever. More information about SAVE can be found below. Borrowers signed up for the current repay plan will be automatically enrolled in SAVE. Review your auto debit enrollment or sign up for the first time to automatically deduct your monthly payment from your bank account. To do so, log into your loan servicer's website or contact your loan servicer directly. If you were enrolled in auto debit before the payment pause and you would like to resume when payments resume, you need to confirm your auto pay enrollment with your student loan servicer if you haven't already done so. Okay, when will my payments be due? Your first payment will be due in October of 2023. You'll get your bill in September or October, at least 21 days before your payment due date, with your payment amount and due date. What's my monthly payment amount going to be? Your bill arriving in September or October will contain your payment amount. You'll be able to visit your account on your servicer's website to see your payment amount once your disclosure or bill has been sent. Make sure you know which loan servicer is yours. You can also get an estimate of your payment amount and compare repayment plans by using Loan Simulator. And there's a link if you click it. And again, for anybody just tuning in, I'm on the studentaid.gov website talking about where we're at with student loan debt forgiveness and payments resuming this October. Okay, what happens if I'm new to repaying my loans / haven't made a payment before? Your first payment will be due in October 2023 unless you left school recently within the last 6 months and will still be in your automatic grace period at that time. Your monthly payment amount will depend on what repayment plan you choose. If you don't choose a plan, you'll be put on the standard plan that divides your total loan amount into monthly payments over 10 years. This plan is not based on your income. Compare repayment plans using the loan simulator and consider applying for an income driven repayment plan, an IDR plan. In the coming months, we will implement the SAVE plan, the most affordable repayment plan ever created. Learn more about SAVE. We'll click that in a second. Borrowers signed up for the current repay plan will be automatically enrolled in the SAVE plan. You'll get your first bill at least 21 days before your payment due date. What if I have loans in default? Most borrowers in default can use the Fresh Start initiative to easily get their loans back in good standing. Don't wait, it's free and takes 10 minutes or less to sign up and enroll in an affordable repayment plan with payments as low as $0 a month. I've heard the Department of Education is rolling out a more affordable repayment plan. What is it and how do I sign up? This summer, the U.S. Department of Education will implement parts of the SAVE plan, the most affordable repayment plan ever. Borrowers who enroll in the repay plan will automatically be enrolled in the SAVE plan when it becomes available. For more information on the SAVE plan, visit studentaid.gov/save. And then be aware of people. If you guys try and be the ones reaching out to them. Try not to be wary of people soliciting you is what I'm trying to say. Okay, guys, there's 4 of you in here. My stream's not frozen, right? Because Rocky, where are you? I know you had questions. Okay, now there's 5 of you. Hopefully you guys can hear me. Let me know what questions you guys have about student loan debt forgiveness. Let me know how I can help you. Okay, we're going to click the studentaid.gov/save link so that we can get more information about that plan. Okay, I'm going to take another sip of coffee. The SAVE repayment plan offers lower monthly loan payments. The Saving on Valuable Education SAVE plan replaces the existing revised Pay as you Earn repay plan. Borrowers on the repay plan will automatically get the benefits of the new SAVE plan. The SAVE plan, like other income driven repayment IDR plans, calculates your monthly payment amount based on your income and family size. The SAVE plan provides the lowest monthly payments of any IDR plan available to nearly all student borrowers. What you need to know. The SAVE plan includes multiple new benefits for borrowers. The changes below will go into effect this summer, and additional benefits will go into effect in 2024, so next year. New plan change. The SAVE plan increases the income exemption from 150% to 225% of the poverty line. What this means. The new plan can significantly decrease your monthly payment amount compared to all other income driven repayment plans. Your monthly payment plan is based on your discretionary income, defined as the difference between your adjusted gross income and 225% of the U.S. Department of Health and Human Services poverty guideline amount for your family size. That means you will not owe loan payments if you are a single borrower earning $32,800 or less, or a family of 4 earning $67,500 or less, and the amounts are higher in Alaska and Hawaii. Borrowers earning more than these amounts will save at least $1,000 per year compared to the current income-driven repayment plans. We're still under the new plan changes here. So on the left, we've got the plan eliminates 100% of remaining interest for both subsidized and unsubsidized loans after a scheduled payment is made under the SAVE plan. What this means, if you make your monthly payment, your loan balance won't grow due to unpaid interest. For example, if $50 in interest accumulates each month, and you have a $30 payment, the remaining $20 would not be charged. But that says remaining interest. It eliminates 100% of remaining interest. But that also seems like while it's not growing, it's not decreasing either. Somebody let me know if I've got that wrong, but that's frustrating. Okay, the SAVE plan excludes spousal income for borrowers who are married and file separately. This change removes the need for your spouse to co-sign your IDR application. Take a sip of coffee again because this is a lot of talking. When can I apply for the SAVE plan? If you're already enrolled in the repay plan, or if you sign up for the repay plan today, you'll automatically be put on the SAVE plan once it becomes available. The application for the new SAVE plan will be available this summer. We'll notify borrowers directly when the new application is available. How do I apply for the SAVE plan? If you apply for an IDR plan now and select the repay plan, you will automatically be put on the SAVE plan once it becomes available. You can also select the option for your loan servicer to place you on the lowest monthly payment plan. This will usually be the repay plan. The application for the new SAVE plan will be available later this summer. You can also sign up by contacting your loan servicer directly. What if I'm already on an IDR plan? If you are already on an IDR plan, check to see if you're on the repay plan. Log into studentaid.gov and go to your My Aid page. Scroll down and view your loans. Each loan will list a repayment plan. If you see that you are in the repay plan, that means you'll automatically be enrolled in the Save plan later this summer. If you're on a different repayment plan, you'll need to switch into Repay Now or Save once it's available. To receive the benefits of the Save plan, if you don't have a studentaid.gov account, you can create an account. How much will I pay each month? The Save plan calculates your monthly payment amount based on your income and family size. Starting this summer, if you're making $32,800 a year or less, which is roughly $15 an hour, your monthly payment will be zero. If you're making more than that, you'll save at least $1,000 a year compared to other IDR plans. Okay, so monthly payment under the Save plan. So on this side, we've got your income from it goes up in $10,000 increments. So we've got $0, 10K, 20K, 30K, 40K, 50K, or 60K. And then we've got your family size. Remember, if it's just a family of you, you're going to be your family size is 1. So let's just say that that is your current family size. So would you have a loan payment amount under the Save plan if you're not making any money? No. How about if you make $10,000 a year? No. How about if you make $20,000 a year? No. $30,000 a year? No. Now, at $40,000 a year, you would start having a monthly payment under the Save plan, and your family size was 1, and that payment would be $60 a month. If you make 50K, they're estimating it would be $143 a month. And if you make 60K, that would be $227 a month. Okay, now let's say that you have a family and it's 2. Maybe it's yourself and you have a child. Still, so the difference there would be they're estimating that you would not have payments if your income is $40,000 a year, and your payment, even if you made $50,000 a year with a family size of 2, would only be $47 a month. Okay, so hopefully that made sense. Okay. Now, savings for a sample student loan borrower. Before I get into that, let me see if you guys have questions. Hi, Francis. Do I know of any cheap and fun things to do on the 4th? Oh yeah, let's do this. Okay. Andrew, you always get it backwards. Okay, so first of all, happy early birthday, Andrew. Mine's the 6th, so mine will be Thursday. And Mom, I don't know of any fun stuff. As a matter of fact, a lot of you guys have deduced I'm working in Pasadena now, and they used to do free fireworks at the Rose Bowl. And so I was looking into that, hoping that I could kind of see them from where I work if I like step outside during my shift. And they're not doing them this year. Instead, they're doing a soccer game, which is weird. Okay, W says, is a used Toyota Yaris that's 10 years old a risk to buy or a good choice? Friend is trying not to get into that car loan trap. All right, W, we are going to talk about this for a minute before we go back to student loan debt forgiveness. Okay. These are all things that either my mom or my grandma, like that my family has taught me about buying a used car. Number 1, what are the total miles on that 10-year-old Yaris? So what are the total miles? Number 2, how many owners has that car had? A car with 1 owner is probably a little bit more reliable. That was that person's car. They took good care of it for a really long time until they were ready to get something else. So the lower number of owners, the better. Okay. Number 3, ask to see the maintenance records on the car, or even like online, they should be able to get like the maintenance records. Like my car, every piece of work that I've ever had done on my car, I still have that paperwork. I have paperwork from work that I just had done on my house. Like I keep all of that. Hopefully they've kept that too, so that they can show you, yes, I've had routine oil changes. Yes, I've had this work done. No, it doesn't need anything major. Number 4, I would bring somebody with your friend to look at the car and open up the hood. Okay, you're saying it only has 60,000 miles because it was owned by older people and it was maintained. That seems like a good deal to me. Something that my mom was concerned about. She was looking at someone's car and they were a little bit older. They didn't drive it a lot. And if the car just sits there, I guess that can kind of also be bad. So, um, did they regularly drive it? And just go look under the hood, at least check the oil, make sure that it's not dry, make sure that it's not like black, like too dirty. Um, should kind of be like a like not pitch black, and then shouldn't be totally low either. So at least look under the hood that much. But yeah, it kind of sounds like a good, that's cute. Okay, they drove it to play bingo and go to the market. Yes, haha. Okay. So yeah, so I mean, I'm not going to advise you anything, but to me, that seems like a good deal. And it seems like your friend is very wise for not wanting to get into the trap of an auto loan. And, even if, worst case scenario, they borrow the car and it turns out not to be a good car, it would still have some resale value. And every month that they're not making that new car payment, like they could save the difference. And also, a Toyota Yaris is going to be fairly cheap in terms of insurance. And it's going to, heck, I might want that car as a matter of fact, if your friend doesn't. Um, Toyota Yaris is going to be fairly inexpensive to insure. And um, what the heck else was I going to say? Oh, and it's going to be good on gas. Okay, now back to student loan debt forgiveness. Okay, here's savings for a sample student loan borrower. So Alexander, the annual income is 38,000. Their loan balance is 25,000. The interest rate is 5% on a direct subsidized loan. Alexander is a borrower with no dependents and makes $38,000 a year. He would save $91 per month under the SAVE plan. That's pretty good. So the previous monthly payment under the repay plan would have been $134 a month, but the new monthly payment under SAVE would be $43 a month. It assumes that the family lives in the contiguous 48 states. Estimates are for illustrative purposes only. Your loan servicer will calculate your actual monthly payment under the SAVE plan. And then starting next summer, borrowers on the SAVE plan will have their payments on undergraduate loans cut in half, reduced from 10% to 5% of their income above 225% of the poverty line. Borrowers who have undergraduate and graduate loans will pay a weighted average of between 5 and 10% of their income based on the original principal balance of their loans. What other changes to income driven repayment are coming this summer? We're launching the following changes to the income driven repayment application and process this summer. Okay, I want to rant for a minute. Right after I read Andrew's question. Okay, you only put 6K a year on your car. You don't drive that much either. Remote work was a godsend, I guess. Yeah, and my car is now 10 years old as well, and I have about 115,000 miles. And that's with my commute going up, but that's with like almost a year of not working. Um, so yeah, and like every once in a while I like to take a trip to Vegas and things like that. So yeah, I put about 11K a year on my car, which is about average. But yeah, that car sounds like a good deal. It sounds like they just did limited driving. Okay. So my kind of rant on this whole student loan debt forgiveness thing, right? And again, not talking about whether we should or whether we shouldn't, because I have mixed feelings on that, right? Like, and I think you're allowed, and I think you're allowed to change your perspective. My mixed feelings are at some point, even if you were really excited when you're young, at some point somebody sat down and told you how much your loan payment would be, right? So at some point you knew that you're paying for an education. But that's where I'm like, maybe we don't have it quite right here in America. I had some friends from Sweden, right? Like, also, no, I won't rant about that yet. So I had some friends from Sweden, and their schooling is free. They can choose to be whatever they truly, truly want without thinking about the cost. I think maybe some kids do want to be like a doctor or a lawyer or one of the traditional, a dentist, but that takes a lot of school. And I think that for some people who really might have the desire and the temperament to go out and help others, they're dissuaded from going out and pursuing those careers because it's already going to be a struggle to pay for 4 years of college, let alone like the additional years that it would cost to get like your PhD, right? So like school goes, right? It's your an AA from a community college. Then it would be that's 2 years, then 4 years for your bachelor's degree, then 6 years for your master's degree, and then like 8 years for your doctorate. So if somebody's already wants to go to school, but they're worried about you know how they're going to pay for it already, and then you're tacking on years and years and years of you're lowering the amount of years that you're working and you're raising the amount of years that you're going to school and incurring debt. It does not exactly encourage people to go out and pursue those careers. And we really do need doctors and lawyers and all of that. Right now, to get a doctor's appointment, just like a regular doctor's appointment, she's like booked 2 months in advance, which like that's like if you want to go see your doctor, like you don't want it to be a struggle to get an appointment, but it is because there's not enough doctors right now. Okay. Alex is asking, when I did Uber, did I hate it? You might only do Uber Eats as a side thing. Okay. I did. I did kind of hate it, quite honestly. Not at first. Also, back when I was doing Uber, they used to send you like these weekly reports, and I had a weird schedule anyway, right? Um, I worked at a movie theater, and I still do, but before the pandemic, we would always have like 10 o'clock or 11 o'clock shows. And so you'd get out of work at like 1 or 2 in the morning. And I was like, oh, perfect. Like, I'll go pick up the bar crowd that are getting out of bars after I work. And I mean, I definitely didn't have to wait to get a call, but I was picking up like very, very, very drunk people. And sometimes it was either like picking people up from their local bar. And so the ride wasn't very far, and I don't know how it's structured now, but back then you didn't make very much money when you were only doing short local trips. Now I think they reward you for doing like a lot of trips. Um, and then like my car was brand new and I had these people, they were dressed in like tuxedos, but they put their feet on like the back of my chair and that annoyed me. Then, like, I live in Los Angeles County, so, like, if it wasn't a really close bar, sometimes I was picking up people, like, from the middle of Hollywood Boulevard, and this is when Uber was pretty new, and I feel like taxi drivers, like, hated Uber drivers and were, like, trying to run you off the road. There's 8 of you guys, I'm talking about Uber right now, but if you have questions about student loan debt forgiveness, just put them in chat and we'll get to them. Okay. And then you'll only do Uber Eats because food doesn't talk back to you. Plus, you can drive an older car like yours for Uber Eats. Yeah, and I actually, one of my former employees like just messaged me yesterday and was like, "Hey, Shelly, how are you?" I was like, "I'm good. I hope you're good." I was like, "I'm back with the company we worked for before," and I was like, "What are you up to?" and they were like, "I'm driving, Postmates and Uber Eats," and they were like, "I'm making more money than I was making, um, at a 9 to 5." So they're really happy with it. I will say this, right? And I've driven Uber. Meet Kevin, who is somebody whose channel that I watch. Meet Kevin kind of says that he discourages people from doing Uber Eats. And the reason why, and I get this, like at least on a certain level, is when you're looking at updating your resume, Uber Eats might not look the best on your resume. Why not do like another entry level job like I don't know, like working at a grocery store or front desk at a dentist office or something like that. Where maybe if you're working front desk and or maybe you do both. Like maybe you work, front desk at the dentist office, but what you're really hoping to learn is medical billing. And the thing is, like, I bet, that someone's going to teach you, like, whoever you're sitting next to, like next to you at your desk while you're doing appointments, like, you're going to learn things as you go along that might help you transition. And that might help you pick up long term skills that might then help you land a better job going forward. Like basically he's saying like what skills are you going to gain by driving for Uber? And like I until he said that I never thought that, but I was like, like you're kind of maxed out going into it. Like you're good with people, you like talking to people, you're friendly, you can give good customer service and you're a good driver. And you know your way around the city. But outside of that, it's not like a lot of skills that would translate into getting a higher paying job somewhere else. Okay, Joel says driving for Uber for only 2 years made potential employers think I was a deadbeat. You're right. Uber only for a few years kind of makes you look like a bum, just a little. Right. And so you were just doing Uber, right? And now Joel works for a mechanic. Or Joel is a mechanic that works for like a bigger mechanic. Um, which that can help you go into your own business. And yeah, I would say that if you are doing Uber, try not to just do Uber. Like take a class or something like that. Now also, like no judgment and do what you need to do to like get your bills paid at the end. And I certainly like in in those regards, right? In some regards I've been very good with my money and I've been able to get my own house. All as a single person, basically off of retail manager's salary here in Los Angeles. So I'm very proud of that. I've made some really good decisions that way. But when it's come to leveling up my resume, like I wish somebody would have been like, Shelly, like driving for Uber isn't the way to do that. And if you're not concerned with that, like in the long run, that's fine. And I also think, like, I didn't know, like, "Hey, I'm gonna wanna level up my resume." Like, I thought that I was gonna retire from the place that I worked, and now I'm like, "Uh-oh, I should have a plan B." And I do think, like, diversity and other skills and things like that are valued on a resume, and it sucks that, like, taking initiative and, like, driving Uber might not look the best on a resume, but it might not. Other things that I'm interested in now, I'm interested in like project management. So like I want to get like a certificate in project management. I've always been interested in real estate. I would still like to get my real estate license. I love finance. So even though I'm very happy where I am currently, I don't want to close myself off to opportunity and I want to make sure that I'm always like learning new skills. All right, guys, I'm going to go back to some of this student loan debt forgiveness. Anyway, Alex, like like I love you. So, I hope that you know that that's no judgment. I just want like I want all of us to live our best possible lives. And like I never really my mom is so wonderful, but she's always been like, "I'll love you no matter what." I accept you no matter what, which is great. But I also wish that I had somebody being like, hey, aim higher. So I, like my mom, like, I love you guys, right? And but I also want you to aim as high as possible because I want to see us all like change our situations going forward. So, but it comes from a place of love, and I hope you guys know that. Siegel says, I need credit card debt forgiveness. Siegel, this is like, there's so many longer videos that I need to make, but do you ever get those credit card offers for like consolidating your credit cards? Do you get like a 0% introductory rate or anything like that? Because I have used those to like consolidate debt and then pay it off faster. All right, but back to student loan debt forgiveness and the payments for student loans resuming in October. So, what other changes to income driven repayments are coming this summer? So they're launching the following changes to the income driven repayment application and process. So the update to the IDR, new integration with the IRS to access financial information. What this means, when you apply or recertify your IDR plan, you'll be able to provide approval for the secure disclosure of tax information so that we can automatically access your latest IRS tax return. This saves you time because you don't need to manually provide any income or family size information for your initial application or recertification. Automatic IDR recertification of income and family size. If you agree to the secure disclosure of your tax information, the Department of Education and your loan servicer will automatically recertify your enrollment in IDR and adjust your monthly payment amount once a year. You'll be notified when your payment is changing, and additionally, you will always be able to manually recertify your plan. Note, auto recertification will be available in 2024. If you apply for IDR electronically in August 2023 or later, and you agreed to securely share your tax information, then your plan will be automatically recertified the next time your recertification is due. I feel like that we said the word recertify an awful lot. End of interest capitalization when a borrower leaves most IDR plans. As of July 1st, unpaid interest on your loans won't be added to your principal when you leave any IDR plan, except the income based repayment IBR plan, where capitalization is required by statute. Redesigned application. The redesigned application will allow you to enroll in IDR in 10 minutes or less. Save your progress and track your application via your studentaid.gov account. What Save Plan benefits are going into effect next year? The Save Plan includes additional benefits that will go into effect in July of 2024. These additional benefits are likely to reduce payments further and make it easier to manage repayment. The benefits include the following. Payments on undergraduate loans will be cut in half, reduced from 10% to 5% of income above 225% of the poverty line. Borrowers who have undergraduate and graduate loans will pay a weighted average of between 5% and 10% of their income based upon the original principal balances of their loans. Borrowers with original principal balances of $12,000 or less will receive forgiveness of any remaining balance after making 10 years of payments, with the maximum repayment period before forgiveness rising by 1 year for every additional $1,000 borrowed. For example, if your original principal balance is $14,000, you will see forgiveness after 12 years. Payments made previously before 2024 and those made going forward will both count towards these maximum forgiveness timeframes. Borrowers who consolidate will not lose progress towards forgiveness. They will receive credit for a weighted average of payments that count towards forgiveness based upon the principal balance of the loans being consolidated. Borrowers will automatically receive credit towards forgiveness for certain periods of deferment and forbearance. Interesting. Borrowers will be given the option to make additional catch up payments to get credit for all other periods of deferment or forbearance. Borrowers who are 75 days late will be automatically enrolled in IDR if they have agreed to allow the Department of Education to securely access their tax information. How can my monthly payment amount be zero? IDR plans protect a minimum amount of income to ensure you are able to cover basic necessities like food and housing costs. Since IDR plans are calculated based on income and family size, if your household income is below that level, you will have a $0 monthly payment each time you recertify your IDR plan with updated income and family size information. You may see your payment adjusted. If you have a zero payment due, you do not need to pay anything that month. Just make sure you know your recertification date. Once the Save Plan application goes live later this summer, we recommend you consent to the secure use of your tax information so that we can automatically recertify your IDR enrollment for you. This way, you'll never miss your recertification date and won't have to fill out a recertification application. Tip: if you have additional money in your budget to pay down your student loan balance, you can always set a custom payment amount each month, even if you have a $0 payment. If I apply for the Save Plan this summer, will my application be processed before I have to start making payments in October? Yes. If you apply for an IDR plan, such as the Save Plan this summer, your application will be processed in time for your first payment due date. It may take your servicer a few weeks to process your request because they will need to obtain documentation of your income and family size. Okay. All right. Siegel's talking back about credit cards. So we were talking about Siegel saying, I need credit card debt forgiveness. And I asked if they get any information about like a 0% credit card offer or things like that, right? Okay. So, and I only recommend this if you're good with your credit, but you're probably good with credit if, sorry, a text came through. You'll probably only get this like if your credit's already good, right? Those 0% interest things. But let's say you have 3 credit cards. Look at the interest section on them and see, like, are you paying $40 interest? Are you paying $60 interest? Are you paying $120 interest? And then you do have to do the math to see if one of those offers would be good for you. For example, you guys know that I just I put a washer dryer in my kitchen. And PS, that had a gas leak. And I thought I was just being paranoid. I was like, oh, I'm just imagining things. Like, this is what it's going to be like now to have a washer dryer in my kitchen. I was like, it's probably normal to smell a little bit of gas. But it turned out the plumber was here to look at something else. And he was like, no, there's a little gas leak, but it's fixed now. Anyway, to do all those projects, right? I didn't have the money up front, right? So maybe I should have waited, but I didn't. I took out, because you can write yourself a check with those checks. So I took out $4,100, and then there's a processing fee, I want to say of 5%. So it was like another $200 for that. But now I have like 9 months to pay off that amount in full. So basically, if that one-time fee, right? Because it's not just like, oh, roll the debt over, but you can roll multiple credit card debts together, but they're probably going to charge you like between 3% and 7% of the balance as a fee for doing that. But if that fee is lower, than the amount of interest that you'd be paying on the credit cards, then it might make sense to do that. Did that make sense? All right, you guys, what else do you want to talk about today? Yeah. Oh, we got to talk about movies for Debbie, and we got to bring out the little green guy. All right, so we're going to be sad because Indiana Jones is doing very well, and we're sad because there's probably snakes in that movie. I do not like snakes. So yeah, Indiana Jones is doing very well. This weekend will probably be pretty busy for the movies because people are going to barbecue tomorrow and on Tuesday. So they're probably enjoying this long weekend, which means they're catching up on movies. So yeah, Indiana Jones, that was the big hit for us this week. And then Asteroid City. And it's funny because I feel like my walls are like the color of the set from Asteroid City, which is the new Wes Anderson movie. And then what else is doing well for us? Spider-Man's still doing well for us. And then a movie called Past Lives is supposed to be really, really good. All right. All right, you guys. I think I'm going to head out a few minutes early today. Let me know in the comments down below if you have any questions about the student loan debt forgiveness program or just budget topics that you want to talk about on the lives in general. Yeah, we try to go live every Sunday morning at 11 a.m. It has not always been working out like that. But yeah, thank you guys so much for watching Shelly's Millions. I'll see you next time.